Sorry, I don't know why, but I cannot hear you.
Good afternoon, Theo.
Okay. Yeah, great. How are you, Paul, today? How have you been doing?
Thank you. Very well, thank you.
That's awesome. That's awesome. So, ladies and gentlemen, I would like to welcome you to this afternoon webinar with Paul, an experienced and expert trader with many decades of experience in the field. I'm sure that, as always, you're going to gain an amazing value out of Paul's sessions, and please pay attention to him because you're going to gain only positive learning results. In the meantime, please, guys, make sure you like and subscribe our YouTube channel. I will put here the address. Please go on YouTube, give us a thumbs up. Any questions you maybe like and you want to ask. Also, at the end of this webinar, you will receive a poll. You can put any comments you would like, and feel free to say if you have anything to suggest. We are here to serve you. So, with not furthermore, Paul, microphone and mouse, it's yours.
Thank you, Theo. Thank you, Theo. And good afternoon, everybody. Great to have you here with me today. Thank you for the introduction, Theo. If I bring up the slide here, what we're going to talk about today is about advancing your intraday FX trading. I'm just going to add one or two little pieces, okay, that might actually help those who are just sort of advancing in their journey into intraday FX trading. I'm just going to share one or two thoughts and ideas with you that help me in my own, and hopefully will give you a little bit of help and support yourself. So if just bear with me a second, what I'll do is I'll just bring up these slides here. Here we go. Let's just this will all come up here and work. Great, super. So I hope you can hear me. Hope you can see me. I hope you can see the slides, as we said. It's a pretty interesting subject, and I can talk about intraday FX trading until the cows come home, as we would say here in the UK. But we've got about 40 minutes here to talk about it. What would be useful for ourselves today is just for me to understand how many of you here joining us today are able to sort of talk about their own experiences of trading intraday FX. Maybe you do have experience, maybe you don't, maybe you're new to trading, or maybe this is a new area to you. That's absolutely fine. If you just maybe put yourself in the chat box what your own experience has been, that would be fabulous, and we can talk about that. It's always good to be able to hear and share other people's experiences themselves. So, of course, here we are, Admirals, a Forex and CFD broker with global presence and local support, licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and allowing the opportunity to engage with markets using both the MT4 and MT5 platform. If you have any questions about Admirals, please get in touch with them and they'll be very happy to help and guide you. And if you want more access to more timely content, well, then be sure to sign up to the Admirals Telegram channel. You can see it there, okay, at Admirals, and you'll find that the content team here at Admirals will be constantly putting out some fabulous pieces on there, and also reminders of when the next of the English Desk webinars are running for you. So, what we're going to talk about today, well, as the name implies, we're going to talk about how to advance your intraday FX trading, and we'll talk a little bit on, build on what we've covered about intraday trading FX markets so far. And if you look through the sort of Admirals YouTube channel, you will find a plethora of videos from myself and from my other colleagues here at Admirals about sort of intraday trading FX markets. I've done quite a few myself over the years, but what we're going to do is we're just going to do a little bit more elements on it, okay? So we're going to look at things like most important time zones for completely new traders to understand. Where do the best setups occur? Why do those setups occur? What is it that can actually help them? And we'll talk about, if there's time at the end, we'll switch across to the chart and we'll just have a little look at today's markets where we can hopefully identify some possible trade setup based upon what we've discussed here. As I appreciate, it's always good for me to be able to share with you on the slides here, but it always helps to be able to look at live markets and see, you know, how these concepts play out in real time. So Andres says all things are okay, expecting support again. Thank you, Andres. That's very kind of you. Okay, great to see you here. Okay, as I always say, I appreciate that joining us here on our Admirals webinars. You know, we have a wide range of experience. Okay, we have from complete beginners to people who've been trading a good while. There'll always be something to take away. You're all very welcome here. Secondly, I appreciate that, you know, we are, you know, the English desk webinars, but we have a global audience here at Admirals, so you're all very welcome wherever you are in the world. You know, I hope you're doing well. I hope markets are treating you well. I hope you and your families are safe and well in these rather tumultuous months that we're having here in 2022. And for those of you who don't know me, my name's Paul. I've traded for many years, traded for hedge funds, for high net worth individuals. Primarily, I look to trade FX indices and commodities. For my longer term traders, I tend to be a trend trader, but for my intraday trading, I tend to focus on mean reversion and reversals. That's what I'm going to be focusing on today. So you're going to get the benefit of some of my experience from over the years of intraday trading FX markets and having done it, you know, for, as I said, for funds and clients. So from Burren says, you know, happy to, you know, hey, welcome. It's great to see you here. Okay, as I said, great to see you, you know, complete global audience here joining us. Always fabulous to see you. And I always appreciate all of your own thoughts and comments. It's what makes for a interesting session for us all. So as the name implies, it's kind of welcome back to Intra-Day FX Trading, because we've done pieces on it over the years, and I've certainly done pieces from all sorts of angles, from, you know, just looking at understanding the FX markets to actually looking at, you know, price action, okay, and how that can work in FX market. Excuse me, a little bit of hay fever there, but it's also a case of, you know, looking at how can new people engage with FX markets. As the slide says, lots of people are interested in whether they can trade FX markets on an intraday basis. As it says, it is possible, but you need to be prepared. And that's what these sessions are all about, helping educate you and prepare you so that you can make informed choices when you're going through your own trading journey. It's crucially important that you know when the relevant news announcements are being made in those FX markets. And effectively what we're talking about there is that, you know, there will be, you know, there's always economic news coming out. That is always formally seen on an economic calendar. You'll be able to find one on the Admirals webpage, okay, an economic calendar. And whilst for new traders, I won't expect you to be able to understand the economic news or to be able to give me, you know, detailed insight into what that news implies. What I would expect you to do as a new trader is to know when that news is coming out. Because to begin with, if you're a new trader in intraday trading, you want to know when that news is, because you don't want to be stepping in front of it. Okay, you don't want to be trading around it. As you you know, as you develop in terms of skills and experience, that may change. But as a completely new trader, and that's what I'm going to sort of, you know, pitch at this particular level, is that it's important for you to know what the news is coming out that particular upcoming session, you know, especially if it is sort of, you know, relevant to maybe the FX pairs that you're looking at, so that you can actually sort of basically avoid it to begin with. Now, as I said, many people will trade that news, many people will try and trade around that. But to begin with, this is about just you being able to sort of intraday FX trade effectively to begin with. And as I said, as your skill base grows, then you're able to sort of add more and more advanced elements of it. Today's session is going to build upon the kind of first few sessions that I've done. As I said, you'll be able to find them on the Admirals YouTube channel. So, you know, my colleague Thea put it up there in the chat box. There's a link to it there. So be sure to click in there. And if you'll be able to go through it, as I said, there's an absolute plethora of fabulous material there from myself and my colleagues here you can tap into, which is great stuff for all sorts of trading. But equally, you'll find quite a few in there on intraday FX trading, and I would basically recommend that you go and just, you know, watch them and just build your own knowledge and skills base. Remember that, you know, what I've always talked about is that, you know, when you're going to be an intraday trader, it is about you growing. and it's growing from purely thinking like a trader, like yourself, but to also to think about, who is on the other side of your trade, who are the other people operating in that market. It's time to sort of think about what in the old days, in my old days, would have been thought of as the dealer, or now more often you normally find them sort of termed as the market maker. Start to think about who's on the other side of your trade. Be able to sort of grow and think about that, because that might just help give you an edge in understanding the price action that's playing out, so that you can turn it from a threat to an advantage. Louis says hello. Great to have you here. Okay, all very, very welcome. Fabulous group to see you all here. Okay, and as I said, hopefully this will help just give you a little bit of a help. Okay, in advancing your own intraday FX trading knowledge and experience. So, if you remember what I've talked about in previous sessions, is when we look at the FX market, okay, when we look at the foreign exchange market, it helps for us to understand who are the main players, who are the main participants. But firstly, well, you have the market makers. As I said, in the old days, they'd be called dealers, but now everybody likes to call them market makers, and we'll talk about them more about later. But then what you also have, you have corporate accounts, all right? What a lot of people forget when they're looking at the FX market is the FX market was not necessarily set up for speculators like ourselves. The FX market, okay, is actually there. Its job is to basically facilitate international trade. So big companies, big global companies, and small companies will all have, a sort of exposure to the foreign exchange market, because we operate in a global economy. We have international trade flying around the world. And so actually the vast majority of operators within those FX markets, they are corporate accounts of size and scope, who are basically looking to, as I say, facilitate international trade, hedge or offset their risk within those FX markets. Then, yes, you have speculators, okay? We ourselves, whether they be, funds, or whether they're, small private traders like ourselves, or speculators who are operating in that market in terms of just purely for profit. And then finally, the big boys, shall we say, we have the central banks, okay, whether that be the US Federal Reserve or Swiss National Bank or Bank of England, Bank of Japan, etc. Big central banks. Central banks are very important within FX markets. And what I always say to new traders, okay, is that once again, if you're completely new, I might not expect you to understand all of the commentary that a central banker may put out in many of their interviews or in many of their particular formal economic conferences. But I do want you to know when they are speaking, and you can find that out, as I say, by checking the economic calendar. You want to find out when it is, because these are elements, these comments, these conferences, these minutes, they will bring volatility into the market, okay? And as a new trader, what you want to be able to do is just sit and watch that to begin with. Don't try to engage with that. Just sit and watch, let the market volatility play itself out, and then look to trade in the aftermath. As I say, as you grow in skills and experience, that may change, but for today, okay, as a base level, that's what we're expecting. So remember, there are always those four operators, those four players, all right? Market makers, big business corporate accounts, speculators like ourselves, and the central banks. And it is that kind of kaleidoscope of players who all have different timelines, different priorities, different objectives, that is what can actually make from moves within the FX market, moves that we are looking to take advantage of. So when we look at in particular the kind of market makers, who are the people we're going to be looking and operating with or against on a general basis, those kind of the old school dealers, they would understand two things. Namely, the first one is that market moves are rarely one way, and dealers understand that the majority of the time, intraday markets are range bound, roughly around about 80%. So just think about that. Really what you're looking at is about 4 out of 5 days of the week. It's going to likely be that, as I say, markets are range bound, and the market makers, the dealers, they understand this, right? They understand that that is the way. Even when we have great trends, okay, it might well be that actually on the day when you actually look at it, right, that actually most of the move was actually mostly range bound. It is entirely possible. Let's just draw up the drawing tool here whilst we've got it here to use. Is that, we might actually have, what sort of the, let's say the news analysts might call an update, okay, an update in a trend, because invariably the price at the end of the day has closed higher than the low of the day. And so people just would naturally assume that that was just an update in an uptrend. But if you were to look inside that day, what you might find here, and it's just going to be a scruff little drawing, but it's just to help get you an idea of the concept, is that actually price may have opened here, it may have come down. During the day, it might have actually come down a little bit. Actually, then it might have gone all the way up a bit, and then it might have come down at the end of the day and basically closed that way. Looks a bit like a heartbeat, doesn't it, ladies and gentlemen? And so, by all means, the price on the day actually closed higher than it actually opened on the day. It might have closed higher, and that is all the sort of the bigger, longer term picture guys will look at. The price has just closed higher than it opened. But within that day, the price may have moved all over the place before it ended, and it is all those interior moves during the day that is what actually provides us with opportunity, and that's more of which later. So hopefully that just gives you a little bit of insight into the kind of the thinking of those players. What they also know is that they never trust the first price. They never trust the first price, because after a news release, the dealers, the market makers, they know that the first price print is the knee-jerk human psychological reaction to that market, and is very often wrong. Not always, but very often. And that is actually useful information for us to know as traders ourselves. Remember what I was just saying earlier, namely that I don't expect you to understand the news. I don't actually even expect you to trade the news, but I do expect you to know when the news is coming out. And as I said, it might be a case of, if you're a completely new trader, you just sit on the sidelines and watch those economic news releases come out. But what you can watch and see is, well, actually, what is the first price print? Where does price first move? Because to think like a market maker, to think on the other side, is invariably is that they know is that, as I said, the first price print can be very often is a knee-jerk reaction, and very often wrong. And as you watch that and see that play out time and time again over major news, that starts to be very useful information. That can help us, okay? That can be the basis of a useful, trading strategy. But more of that in a future session on FX news trading. So what we learn from about those kind of two rules is that what we'll see is that market makers on an intraday basis, they tend to always be fading the move. All right, they tend to be fading the move. They tend to be selling into up moves, buying into down moves. So if you want to think like a market maker, if you want to think like how a dealer would think, then just remember ABF, always be fading. That's what they're always looking to do. We will talk about that a little bit more in a few slides' time. So what can we learn about our market makers and our dealers and operators from that? Well, one of the things that you can also learn is that market makers, they only make money when orders are triggered. So think about that, all right? They only make money when orders are triggered. Market makers, they will make their money on those big institutional market makers will make their money on their commissions, okay, and also on those spreads, which small at institutional level, but that's all part of their business. So they only make money when orders are triggered. So it is in their interest, right, for price to go to where the biggest numbers of orders are. Think about that, all right? If market makers only get paid when orders get triggered, well, when you look at a chart, it's always interesting to think, well, where would the biggest number of orders be sat? Because that is most likely, right, where the price is going to get moved to. So in one of our previous sessions, we've covered where a lot of those orders are sat, and we'll talk a little bit more about that later on today. For us, though, as private intraday FX traders, thinking like a dealer means that we change our mental maps on our way of operating from longer term trading. as I say, for me, for my longer term trading, for my swing trading, I tend to be a trend follower. I'm tending to look for where is the dominant trend, and I want to be able to ride that as long as I possibly can. But I need to have a mental shift, okay? It's just a complete change in my mentality for when I'm an intraday trader, because on an intraday trader, I'm looking to be a mean reversion trader. I'm looking to be a reversal trader because I'm always ABF. I'm always be fading. That's what I'm looking to do, all right? And I'll explain a bit more of that in a few slides' time. So when I start to sort of break that into usable ideas and concepts that you can take away and utilize in your own trading, well, one of the first things you can start to look at in terms of intraday trading is how to use the highs and lows on your chart. As the slide says there, many markets are still traded by humans. Now, we've also seen that there's been an increase in algorithmic trading, and that will undoubtedly continue. But even those algos have been programmed by humans, all right? Markets are still traded by humans. And humans, we look at charts for usual place to do business. Now, we're looking here in an electronic chart, okay, of the financial market. But humans within any market were always looking for good places to do business. That might well be, humans looking to set up a shop on their high street. That might be humans looking to do business on their local, agricultural grocery market. Humans are always looking for the best place to do business. And us as electronic traders, we're no different, okay? We are no different. So we take advantage and we take notice of significant places where it is good to do business. So when it comes to intraday trading, part of those are what you'll hear me call BRNs, big round numbers. So we look at, for example, pound against US dollar, big round numbers recently there was, about 120, all the sort of treble zeros. In euro against US dollar, the last week or two, there's been a lot of fanfare about actually parity between the euro and the dollar. 1, triple zero, quadruple zeros, in fact, in those particular places. So those big round numbers are worth knowing and understanding when they are on your chart, because humans will be doing business there, and that's worth us knowing. What it also is worth knowing is where we can see previous highs and lows. So you'll hear me call PHLs, PDLs, okay? Previous days highs and lows, previous weeks highs and lows, even previous months, previous years highs and lows are worth knowing, because they are all tradable opportunities, especially on an intraday basis. I'm going to talk a bit more about that now. So why are previous highs and lows tradable? Ideally, it's because there are usually lots of stops there, usually lots of stop losses there. Okay, so think about that. Think about that based on what I just said a few slides ago. If there's lots of orders there, who does that become attractive to? It becomes attractive to the dealers, to the market makers. Remember, they only get paid when orders get triggered. But for me, okay, I'm looking to take advantage of what is just normal price action moves. So what happens is those areas, they start to offer points for a mean reversal trade. What does that mean? Is that, as price maybe balloons out to the edges, what it's looking to do is it's looking to revert to the mean. Okay, it's looking to turn around, revert to the mean. So it becomes ideal setup for a reversal trade. And that's what we're going to have a little look at some ideas over this session and over future sessions as I add them in to sort of help build your picture and understanding of how to do this. So all those areas make previous highs and lows very tradable, very interesting areas for us to sort of take note of and actually look at places where we can do business as intraday FX traders. So, just a couple of examples here, it's the euro dollar on the 15-minute chart. I didn't try to pick a picture perfect one. I picked like a scruffy chart out here because, it's trading, okay? Invariably, there is always going to be a little bit of a scruffy. The chart's going to never be picture perfect. It is about you being able to see and understand what we're actually sort of looking and working at here. So this is Euro dollar 15-minute charts, and what I want to see here is, at the start, okay, at the start here, just excuse my drawing. I'm a better trader than I am an artist, but you get the picture. This was the high of this particular session after this sort of double bottom here, okay, the lows there. The next day, what we can see, what I want you to be able to notice is that invariably, price has a reaction there. There are reactions there at those previous highs and lows. In this particular case, price breaks out, comes back, it retests before it launches itself up, puts in a double top, and then comes down for the day. So if you think about it, remember what I was saying, we've entered the day here. We're coming out of the day there. It is, the actual market has closed up by a smidge, by maybe only a pip or two, but actually there was plenty of range on an intraday basis during that day to allow us to be able to trade it. What we can see the next day is having had actually the sort of overnight sort of congestion of the Asian session. We popped down to where, well, we popped down to what was the lows of the previous day. Lows of the previous day there, what we can see is basically price makes a rejection, okay, a reversal pattern before it flies its way up. Flies its way up almost to these highs, okay, of the previous day before dropping down away. Then what we see is that the next day, okay, that comes in, is that the first time price comes up to the high of the previous day's high, what happens is price is rejected and it's pushed down. Tries again, push down, tries again, push down before it breaks out, makes a double top, comes back into the range. And actually, we close out the day here. We close out the day here, okay, having entered the day here. Yes, so, when they look at it, when the analysts look at the day, the price for the euro dollar closed higher than it opened. But you can see for yourself, there was a huge amount of movement in that day, right? And that huge amount of movement on the inside of the day, that is what provides us with opportunities for intraday FX trading. And that's just what I want you to try and understand as you grow. You can look at the daily chart, you can look at what the daily candle is, but as you grow in experience and knowledge, what you'll be able to do is you'll start to be able to sort of break that down mentally into, well, actually what happened in the day, because as I said, there'll be plenty of opportunities. So as I said, that's a bit of a scruffy chart. It's not perfect, but if you've traded long enough, you'll know that, picture perfect days are rare enough. Very often it's scruffy, and then being able to see and understand scruffy and being able to recognize how that plays, that will help you more in your own particular trading. So how do we actually start to use this information that I've talked about there, right? In terms of the participants, how market makers are looking to operate, understanding things like big round numbers, previous days highs and lows. Well, as an intraday FX trader, we want to, what I said at the start, know what, if any, major news is being released. This is very important. Don't expect you to be able to explain it to me, but you need to know when it is, okay? You don't want to step in front of that freight train. We also want to look for the previous day's highs and lows. We want to understand that. Also, weekly highs and lows are also useful as well. And we also want to recognize any significant big round numbers. That starts to become useful for us. When price reaches those areas, well, then we are looking for a mean reversion setup, a reversal setup. So they can be elements that you will find I have covered time and time again here on the Admirals webinars. You can find them in the Admirals YouTube channels. We've done plenty of videos on pin bar rejection candles, engulfing candles, key reversal candles, double tops or bottoms. Today, I'm going to focus on double tops and bottoms. Very simple reversal tactic. Looks great when you can see that appearing on those intraday charts at those areas we've talked at, big round numbers, previous days highs and lows, previous weeks highs and lows. Just keep an eye on that. So, double tops and bottoms, as the name implies, you've not got one top, you've got two. You've not got one bottom, you've got a second. So start to look like M's and W's on your chart. That's what we look at, that's what we get to see. And they repeat themselves time and time again across all time frames and across all instruments. Although today, remember, ladies and gentlemen, we're just going to focus on intraday trading, but actually once you start to learn to recognize these across your charts, You will see them across all time frames and all instruments. So they're always it's a helpful pattern to understand, so that you've got the cognitive recognition abilities to see it anywhere, because you will see it anywhere. So why do double tops and bottoms work? Well, for those of you who know me will know that one of the games I love is rugby, okay, the English game, global game these days, rugby. And the reason I look at it is that when we see double tops and bottoms being formed, I think of it very much like you're looking down on what is a rugby scrum. If any of you ever watched rugby and the two teams go head to head, okay, and they sort of crouch down and engage, that is very much like what we're seeing at the sort of formation of double tops and double bottoms. And what we have is the price, it is the rugby ball, right? The price is the rugby ball. It's being scrapped about within the scrum, okay, as both sides look to grab control of the price. And in this particular case, when it comes to trading, the two teams is the bulls, okay, the people who will go long, and the other side of the bears, the people who want to go short. And what they're trying to do is they're trying to wrestle control of the ball, okay? They're trying to wrestle control of the price action from the opposition. At some point in a rugby scrum, one of the team is likely to tire, or it's likely to make a mistake. And what happens is the ball gets pinged out, and then the play continues fast. And it's a little bit like trading, okay? In the markets, because price has probably already put a move in one direction and has actually moved to the edges of the chart, it's moved to previous days' highs and lows, maybe it's moved to big round numbers. Well, what we are expecting more often than not is that the price will get pinged out, but it will get pinged out in exactly the opposite direction the price went into that pattern. Remember, double tops and bottoms, they are reversal patterns. So if price has rallied up strongly, we're expecting it to come back down strongly. That gives us an edge. That helps us understand what is most likely to happen, so that we're in a position to take advantage of that. And that's what we're looking to do. So hopefully, if you've any experience of playing rugby, you'll understand that. Maybe it's not the best analogy, but it's how I see it. Okay. For those of you who maybe don't really fully understand rugby, go and watch it, ladies and gentlemen. Great game. Okay, fabulous game. All right. Okay, and you'll find everyone's very friendly. Go and enjoy yourself at a rugby game. If you want a little bit of even let's say a closer to home understanding of double top and bottoms, well, you can see one in, if you take a look at your left palm. If you take a look at your left palm and just squeeze your hand a little bit, okay, hopefully you're all doing that as it, what you'll be able to see is you'll see a constant reminder of a double top, an M pattern in there, in the crease, okay, in your hands. So if you ever need a reminder of what you're looking to try and do on an intraday basis, you merely just need to look at your left hand, ladies and gentlemen. Hopefully you're all doing that now. If not, there you go. Hopefully you can see that there. I can assure you it's there. It's a constant reminder of what we're looking to do. Keep it nice and simple. We're looking for a double top or an M pattern. So what we're looking for is, we want to sort of today focus on double tops or double bottoms. But remember what we've just been saying. I don't look to operate that in a silo. I don't look to necessarily operate that on its own. Ideally, what we're looking to do is to see a confluence of signals. In an ideal world, that is what we prefer to see. Because what we see is that, when we see that combination, well, that starts to give us higher probability setups. That's what we want to do. There is no guarantee, okay? There is no guarantee with a higher probability setup. There's no guarantees in trading whatsoever. But what we are doing when we see that confluence of signals is we are giving ourselves the best chance possible. So what we need to understand is we need to understand the price action patterns, the double tops and bottoms, the M's and W's, also the location, right? Did it happen at maybe a previous high or low? Did it happen at a big round number? What we can also take into account is the timing. Did it happen after the Asian range closed and the European session opened? Certainly for traders based in the European time zone like myself, that is a crucial time to be able to watch and engage with FX markets on an intraday basis, because London is still the headquarters, the capital of FX trading. So, the major moves happen in that London European session. And, well, some of the indicators. One of them is ATR, which is I'm going to cover in a future session. how to use the average true range indicator in the context of intraday FX trading. So there's a few elements there, and when they come together, that is when they give us the highest probability setups. That's what we're particularly looking for and interested in. So it's interesting and useful to know, especially for completely new beginners, what is the best time zone for the intraday trading? Well, you can see there, by currency, when those particular markets are open. Still, what I suggest is that, I'm biased because, I live and work and operate in the European session time zone, which basically, if I go by London times, tends to start about 7 o'clock London time, which is about 8 o'clock Frankfurt time. That's when the sort of Frankfurt market starts to open, the continental European market opens, then coming to 8 o'clock AM London time, which is when we start to see the major moves happening. Those major moves will happen and run for the next couple of hours, from around 8 o'clock London till about 10 o'clock London. Some of the things you have to be aware of is that quite a lot of the UK news gets announced about 9:30 London time. So remember what I said, when you're a new trader, you don't want to be trying to trade that, but you want to be aware when that news is coming out so you're not in front of that freight train that's coming your way. We then have, trails off, and then from around about 1 o'clock London time, then what we start to have is the US session starts to open, leading towards, at 1:30 UK time, sometimes you'll get US news, in particular the NFP, non-farm payrolls, first Friday. But then also what you'll get is 2:30 London time, go to 9:30 US time is when the US stock market is open, so there'll always be a little bit of moves there. So for that period there, from around about 1 o'clock London time, through to about 4:30 UK time, that is when we have both the European market and the US markets open before the European markets close down, right, from 4 p.m., 4:30, etc. Then what we'll have is that the US session will run on London times again. London time will start to run till about 8-9 p.m. European time. Then we have a little bit of a lull before the Asian session officially opens in Tokyo at around about 11 o'clock London time, which then runs overnight through the Asian Pacific session until we get back to 7 o'clock London time next morning, where Frankfurt opens and the European session begins. So we have effectively a 24-hour, 5-day market for the FX market. So as I said, I particularly look to focus in the London session, but I recognize we have a global audience here, don't we, ladies and gentlemen, right? And so it's about finding which time zone you're sat in, and also which are the major currencies that operate best within your particular time zone, and failing that, well, as you've heard me say many times, the US dollar is the major player, within FX market. So if you're always understanding that, what the US dollar is doing, well, then you're in an opportunity to sort of, operate effectively within FX markets. So what I start to look for, and as I said, I'm just picking up examples from all sorts of different time frames to just give you, ideas and give you insight as to what we've talked about here. Let's just bring up this drawing tool. This is a 5-minute chart on the Kiwi dollar. And actually what we can see here, let's just move myself down here a little bit, is we can see that, what I have here is, maybe hopefully you can see that previous week's high, these blue lines, previous week's high and yesterday's high. And you can see that yesterday when it tapped the previous week's high, we can see that basically price rejected it, didn't it? Price reversed off that. What we saw overnight here, in terms of the Asian session, the Kiwi against the dollar, is that we moved back up to this zone, this yesterday's high, previous week's high. What do we put there? We put in a double top, an M pattern before price collapsed all the way down to the 200 period moving average. That's a nice little overnight Asian session. Now, for me, I wouldn't have been traded that because actually I come in here, I normally come in here around as the European session opens. But I want to share different setups for different time zones, so people can see that, these setups occur at different times, based upon the global audience we have here. But as I said, if you can see that, that's a very nice, as I said, my drawing skills are not as good as my trading skills. That nice double top that occurred at the previous week's high, at the yesterday's high, which we know price is rejected from before, it's that confluence, isn't it? It's that confluence of events, a confluence of signals, all 3-4 things coming together at one time and place. That is what's giving us a good setup, And all we can do is take those best setups How they play out, well, that depends upon what comes on in the market, but all we can do is identify good setups, and our job as a trader is to put them on and manage our risk accordingly. So, what we had here is some more examples. Okay, so just trying to understand the difference of big round numbers. Well, actually, this is from the last time, but actually it's occurred. This grey block here is the Asian session. All right, overnight. Remember what I was saying? About 7 o'clock-ish time, we start to look in, and what we see here is, hopefully, if you can see this on the side, is this 120. Okay, 120, big round number. Price comes down to it and looks like it might actually sort of carry on before it puts in an engulfing candle, which then becomes a double bottom, doesn't it? Before price accelerates up for the rest of the session. And once again, what we see is actually price comes into the session here, goes out of the session there. All right. So in terms of, the price action on a daily basis, yes, the pound, okay, ended higher than it started the session. But we can see within the session, there was great moves. There was a move down to a big round number and base of the Asian session, sort of very 1, 2, 3 double bottom pattern before price rallied up. That is the kind of setup we're looking for, okay, ladies and gentlemen, around big round numbers. Pound against the Swiss franc on the 5-minute chart. And this is, as I said, what we can see here is, on the previous day, we can see the price tried to put in a double top there, didn't it? But it was the end of the session and price just ran sideways. The overnight Asian session was pretty quiet before we basically ran down, put in a double bottom here before we rallied our way up to what was previous day's high, rallied its way up to previous day's high. Then what happened? We got a pin bar. Okay, we got what you might say is not a particularly conventional double top, but we tapped that area twice before price rolled over during the during the US session. The green box is what I sometimes put in to reflect the US session. So you can see that during the Asian session, price was pretty dull. Price went sideways. That's not unusual. And we can see the US session was pretty monster session both of those days. But the important thing is looking at how does price react when it gets back up to the previous day's high. Just look at that. Okay, that's what you can work with, and that's what you can learn from. Also, just looking at it at a slightly later time. Okay, in terms of 60-minute chart. What we can see here is that price was collapsing there until it hit the 160 level. Okay, remember I was talking big round numbers. So also the base of the Asian session, price breaks out of it. Okay, price reverses there. Okay, and what we look at is price reversing there, the big pin bar rejection candle before price moves away, all right, to it back all the way up there over the next couple of days. Just as I said, just look to see how price reacts at those big round numbers coming out of the Asian session. Okay, that's what we start to look at and become interested in, because that's where we're looking for us to do our business. So we've got a couple of minutes left, so we'll switch across the charts in a moment. But those of you who know me. I always like to send you away with a little bit of homework. Your task from today's session, ladies and gentlemen, go away and open any chart on any intraday timescale, 5, 15, 30 minutes. Draw forward, okay, the previous day's highs and lows. I actually have a little indicator, okay, that I can put in, which you'll be able to find on most of the MT4 and MT5 forums, and draw on any significant big round numbers. Then go through and look at what happens when price reaches those levels. What happens when price reaches the previous day's high, the previous day's lows, those significant big round numbers, the treble zeros? Does price power on through, or does it reverse and then revert back into the range? If it reverses, were there any significant price action signals to alert you to a trade opportunity? Just take a look. There's your homework. There's something for you to do over the weekend. Go and get a few charts up and just do that, okay? And you might find that very enlightening. And also, the more you do it, the more you'll actually be able to see it and understand it and recognize it, and the more you become comfortable with actually trying to trade that. So in conclusion, ladies and gentlemen, before we just switch across to the charts for the last moment or two, intraday trading FX markets is possible. You have to be aware of any impending news and announcements. 80% of the time, intraday FX markets are practically range bound. So learn how to trade reversal and mean reversion setups. Watch how price reacts around previous days' highs and lows. The double top or bottom, the M or W formation is useful here. So why don't we have a little look at live markets for a moment or two? As always, if you've got questions, you can ping us there, okay, Admiral Markets or at global@admiralmarkets.com. And as I said, let's just switch across. And we've only got a moment or two, but we can have a very quick look, okay, as always. So just bear with us one moment, ladies and gentlemen. Here we go. Okay, so what we're looking at here. What was I looking at here today? So what we had here, for example, pound against the Swiss franc on the 15-minute chart. All right, what I was looking at here is how that for yesterday and today we had a real big rally there. Okay, that was on Wednesday evening post FOMC. The following morning after the Asian session, price came back up to that area before it collapsed. This morning, what happened is we came up to the top of the Asian session. We put in a very scruffy double top there, very scruffy, before we dropped all the way down. Where did the move stop? The move stopped at yesterday's lows, where it basically bounced and rallied off there. And now we're looking at, if I just move this away, now we look at, this could well be let's just clear all this drawing. This could well be a much bigger double bottom that forms there, okay, which I'll watch over the over the rest of the session today and coming into next particular week. Is there anything else here we can just have a quick look at for a moment or two? Is that just pull that up? Is that we had quite a few moves on that? We've had quite a few moves on sterling this week. What we will see here is, if I just zoom out here a little bit. Let me just zoom out here a little bit, because pound against dollar, we've had some significant moves. Okay, I'm just going to zoom out there, because what we have had here is, once again, if you can see there on the far right, we've had 120 is the big round number. And hopefully you can see the price reacts there. Whenever the price is there, the prices react. We've bounced away from it. Okay, we've bounced away from it here. Yesterday, what we had was, let's just zoom in there a little bit. The price came up to what was at the high of the Asian session. If you look at that, that is actually a double top there. If you look there, before price fell away, before, here we go, we had a small double top there, before price fell to a bigger double bottom, but price rallied its way up. Price pushed outside, okay, price pushed outside of the session, put in a big bearish engulfing candle before price dropped its way all the way down to the 200 period moving average there. So there you go, ladies and gentlemen. Unfortunately, we've run out of time. As I said, I could talk about this until the cows come home. We could talk about it for hours and hours and hours. But there will be future sessions that I'll do that I'll just add and build, and we'll have a little look more at live markets, etc. I hope you found that useful. As I said, take away that homework task, all right? Be able to just take away, just go away, all right? Draw on, okay, an intraday chart, all right? What were the previous day's highs and lows? Where were the big round numbers? And look at how did price react when it got to there, okay? What did it do? Did it power through? Was it more likely to actually revert there, okay? And did it provide a reversal trade? Was there like a rejection candle, pin bars? Was there engulfing candles? Was there key reversals? Or were there double tops and bottoms that might have given you a trade signal? As always, it just remains for me to say that, I wish you the best of success with your own trading endeavors, ladies and gentlemen. Have a fabulous trading week, and I look forward to speaking to you soon. Trade well, everybody. Cheers.